So a dump is really bad. If they're actually dumping aggressively like they were from March 2022 through August or July, that usually foreshadows some really rough price performances. But as long as they start to rise, that's a sign that Bitcoin is going to go up in the near future.
Hey, everybody. Welcome into the Thinking Crypto podcast. I'm your host, Tony Edward, and I have Brian from Sentiment with me, and we are going to do a deep dive into Bitcoin and altcoins and all the metrics about what's happening in this market. Brian, good to see you. Happy New Year.
Good to see you too, and a very happy new year to you and your community. I think it's been a wild ride in crypto so far, so I'm excited to jump into this.
Yeah, and as always, we like to take a look at the data and see what story it's telling us. We can't look at the markets with our emotions or our feelings. So why don't we start off with Bitcoin, because we use Bitcoin as the measuring stick as to where the market's going. We saw a bit of a fake out recently. Bitcoin seemed like it was doing a recovery and then drop based on some macro financial data.
Yeah, we got up to 102K on Monday, and all of a sudden we were back in the 93Ks at the time of this recording. So quite a big fake out. A lot of people call it a dead cat bounce, where it's one of those rises that gets the crowd's hopes up, and then all of a sudden they all get disappointed after they buy the top. So I think there's a little bit of that going on. I do think the community's kind of sweating the smaller moves. Just as a kind of a perspective reminder, when we go from 93K to 103K, that's roughly a 10%, 9% jump or so. But that's about the same as going from 50K to 55K percentage wise. And sometimes when we get to these higher numbers, these all-time high figures that we've been seeing the past 3-ish months or so, it seems like we're more volatile than usual because we're going up by $10,000 in market value for Bitcoin in a matter of a week, when the percentage of that is only 10%, when it seems like it's 30 or 20%. So just a little bit of a perspective there. But I think overall, yes, we are still kind of seeing a roller coaster in spite of that explanation. It's just what I'm seeing is whales still doing their thing, and we'll look at that in a sec. But it's also, some of the New Year jitters, especially with a new president here in the US. And the question right now is kind of, has the reaction to Trump being the 47th US president already been baked in a little bit? Or is that reaction yet to come as we see, the official inauguration happen?
That's a great point, because markets are not necessarily our friends and they love to play with our emotions, right? And there's the typical buy the rumor, sell the news event. Are we experiencing that with Trump? I think there's some level of that.
Yeah, I think so too. I mean, it's undeniable that markets immediately reacted on election night, which was almost exactly 2 months ago, November 5th. And of course, we saw that immediate all-time high breaching 75K, then ripping all the way up to the 90Ks, and everyone's just salivating for 100K. We see a long tease for a few weeks, and finally, in what was it, mid-December or early December, we finally get there, go over 100K, get all the way up to 108, and then it's been kind of this gradual letdown as people are anticipating 110. Whatever crypto gets to, whether it's Bitcoin or another asset, people are always looking for the next support level or resistance level. And it's, a little greedy at times, I think, from the retail crowd.
Yeah, I actually tweeted about this before Bitcoin started that fake out move, right? That we needed to get a flush out of the leverage and a reset of the sentiment, that we go back to maybe fear. And this is in line with what we've seen historically. The markets can't be in extreme greed forever. There's usually a flush out. And if we're in a macro bull market, which I think we are, we continue, but you get these shakeouts along the way and scare a lot of people.
Right. Exactly. And you nailed it. I mean, every single bull rally needs at least a temporary shakeout. I'd hardly call this even much of a shakeout. We're still in the 90Ks. for Bitcoin. The all-time high just happened, 3 weeks ago, going up to a little above 108K. Now we're in the 93K range. Yeah, it's a retrace, but this is far from a crash. But I think there's so many new people in the space who jumped in above 100K that they're running around like chickens with their heads cut off now, going, oh man, I never expected this. You can actually lose money in crypto. What am I going to do? So there's a lot of irrationality due to the high ratio of new entries into the sector.
Absolutely. Now you have some data here on your chart. Tell us what we're looking at here.
Yeah, so we're just looking at some of the raw social volume and price change percentages over the past 30 days. You can see most social volume now is actually way down because we're comparing the discussion rates between early December to now versus early November to early December. And obviously, crypto was like it was having its biggest time in the sun in terms of media coverage as Trump was elected, and we were seeing the all-time highs. Even though prices have been higher in the past 30 days, there's just less discussion because we've kind of chopped and gone sideways for the most part. And that's why we're seeing mostly red here, which is representing the amount of discussion rates. Now down here, it's more straightforward. These are just the overall price changes over the past 30 days. You can see Bitcoin actually down about 4.1%. We're actually, just since we started talking, we're back in the 94Ks now. Ethereum at about 3,300. Very few assets in the green. You can see BitGet standing out at about plus 146%. I know they've benefited from a merger between their two tokens. Hyperliquid, which I'm sure you've been seeing, Tony, in the news quite a bit. Lots of people are on the hype train, for hype, pun intended. Virtuals up 128%. And then AI16Z, which I have not studied much or researched myself, but I'm sure there are people out there who know a lot about it. It's the best performer among these top 70-ish market cap assets, up about 284% the past 30 days. So yeah, there's still some success stories despite the overall letdown that altcoins have been putting out for the past month or so.
Yeah, and I don't know if the seasonality comes into play where Q4 is usually that incredible quarter, and now this is the pullback, the healthy pullback, and obviously there's narratives that go with these things. Okay, the inflation numbers, this and that, and I look back at the December 2020 into January 2021, we saw a very similar pattern, that cool off, right? And then we continued as we got later into January. So doesn't mean that it will play out exactly, but we could see something like that.
Yeah, that's a really good era that you're bringing up. I was actually talking about this internally with the team, and we've seen kind of very similar patterns to the 2017 all-time high and the 2021 all-time high at the end of those respective years. When we see such massive profits for the entirety of the year, or even like a year and a half or so, there tends to be a big contingency of whales taking profit for tax purposes. As crazy as that sounds, a lot of people want to align their capital gains with their strategies, and by making sure that long-term investments are kind of capped off at the end of the year so they can organize their taxes. Sometimes that can make a big difference. And there's a reason why October and November during bull markets tend to be kind of the end of that thrive period. And then December is where we see a lot of flattening out or even a bit of a retrace in the final weeks. And we can kind of see that pattern if we look at, if I can find the right tab, here we go. Look at the overall trend of whales. This was December 27th, where I've got my crosshair. This was the peak of their accumulation. And then immediately, these last final days, they're actually taking profit and dumping Bitcoin, which we've barely seen at all during this bull rally. The last time we saw flat performance and them not accumulating was the beginning of October. And then we just went on this torrid accumulation pace up until the very end of the year. And as their accumulation came to a halt, so did Bitcoin's price. And it actually went down pretty significantly as they started to take profit.
And then I see a line on there. Is it the supply held by miners?
Yeah.
So miners.
Exactly. So I like to keep that on the same chart just to compare. To a certain extent, there are some miners that are whales, but you can see they had this huge dump in early December, even though prices went up for another 12-ish days or so after this dump. That was a bit of a warning sign too. That being said, miners have not been very correlative with price. They're kind of doing their own thing and oftentimes doing the opposite of what whales are doing. But when they dump huge like this, that can also be a bit of a warning sign. But at least now, they're going on their normal, very minor dump off trend that they've been doing throughout the past year or so. But I tend to put most correlation with this bright green line, which is representing the 10 plus BTC wallets.
So with the whales, we're not seeing a sell-off, but just a slowing down of accumulation, right?
Exactly. Yeah. I mean, if we start like on October 13th, when the accumulation started, from October 13th to December 27th, they've accumulated 130,000 or so Bitcoin. That's a ton. And then from December 27th to now, they've added 1,421. So almost like break even, but still slightly up over the past, 11, 12 days or so. So yes, when we're flat, it tends to be a little more choppy with prices. If I go back historically to prove that point, we'll just go back 5 years or so. So yeah, when they're flat like this, prices tend to be a little choppy. You could even see it here. This is a good example from July 22 to November 22. Prices actually tend to go down if they're not pumping their own bags. But as soon as they start to pump their bags, that's when prices go up. So a dump is really bad. If they're actually dumping aggressively like they were from March 2022 through August or July, that usually foreshadows some really rough price performances. But as long as they start to rise, that's a sign that Bitcoin is going to go up in the near future. It's a much better mid to long term indicator. I would not look at it day to day, but yeah, we don't want to start to see like a 2-month flat period like we saw, in the second half of 2022.
Oh, for sure, because we know what that means. That might be the top, right? They recognize something in that the bear market is returning. Now,
Exactly.
I think the higher probability is that we keep going and they're going to continue, but there's no guarantees, of course. There's no certainties here, but we'll just have to keep an eye on this data to see what they decide to do.
Yeah, and my guess is the whales at least wait until Inauguration Day for Trump to make sure that everything goes as expected. And then as he starts to show whether he's keeping his promises on everything he said he would, that's when they start to resume their normal patterns.
For sure. And I know in the frame or in the backdrop is the macroeconomic stuff with inflation, rate cuts, and all these things. And I guess to your point, what will happen as Trump comes into office? Are we going to see more easing, so to speak, from the Fed and more dovish statements from them? So I guess to your point, the whales, they're watching all these different things.
Exactly. Yeah, that's a great point. And I wanted to pull up this chart to show the amount of discussion revolving around the Fed or inflation or rates. I'll even include, Powell in here. And these are kind of the danger words. When the crowd talks about them a lot, prices tend to go down. You can see pretty clearly that the big discussion was right after that all-time high. We see this huge discussion about rates where Powell came out with a hawkish kind of perspective saying, yes, we're cutting rates one more time, but don't expect too many more of these because the economy's looking to be back on track. And that scared people. And that had a lot to do with why we retraced through the end of the year, along with the profit taking for taxes that I mentioned.
Very, very interesting. See, I love this. The data just telling us, showing us what has been taking place. Because if you're not looking at this data, you're kind of scrambling, like, wait, what's happening? But it's pretty clear and just fascinating. And then with regards to supply on exchanges, is that continuing to dive?
Yes, supply and exchanges still looks pretty good. I'll pull that chart up really quick. So this is the Tether USD coin and Bitcoin supply and exchanges. Red is Tether, which is still going up, which is a great sign. You want to see stable coins moving to exchanges because that implies more buying power and dry powder that is ready to be used when necessary. USD coin is also still looking pretty good. It kind of was declining toward the end of the year, but bounced right after Christmas. And then Bitcoin here in bright green just continues to move down, which means there's less risk of sell-offs in the future. There can still be drops, don't get me wrong, but less Bitcoin on exchanges generally is a signal of confidence, especially with whales who are controlling the supply and exchanges more than any other group, obviously.
Yeah, and with regards to the USDC, I can add some context there. I've been noticing on whale alerts since the beginning of January, there's been incredible amounts of minting at the USDC treasury, hundreds of millions. So I guess I don't know. It's just there's a correlation there, but it seems with the supply going up, it kind of makes sense.
Could be, yeah. I'd actually, I don't have the chart prepared, but we could always look at it by percentage of total supply and how much of that is on exchanges. This is mostly just top exchange addresses for the stable coins and how much they're holding, whereas the Bitcoin is the actual percentage here. So this is more just a raw look at how the largest wallets are doing. But there's a good chance that some of those massive wallets are the recipients of the minted USDC, and that makes a lot of sense what you're saying.
Interesting. So I hope January we get a bit of a turnaround here with all these signals looking good. The whales start accumulating, and it might. I think after as Trump gets into office, he gets settled, things are going to start moving up again. Hopefully. Let's talk about altcoins. What are you seeing on the altcoin front? I know that you tend to follow Bitcoin. When Bitcoin was at the start of that move upward before faking out and dropping, I saw XRP, Cardano, and these other altcoins were moving as well.
Yeah, let's see if we can look at a couple of them. Cardano has been an asset of interest because it had this major rise at the start of the year. It kind of bottomed out right on New Year's Eve, and then huge breakout over the first week, going from it went up about 32% in the first 6 days of the year before having a big drop, along with the rest of crypto, basically, over the last couple of days. So what I can see is that like network activity has dropped off significantly since early December. And this is how a lot of altcoins look, just way less transaction volume. That's not necessarily like a death sentence and indicates the bull run is over. But it does mean that like the FOMO and the institutional kind of contributions that we're adding to networks like Cardano, they've been kind of abandoned over the past month or so. Nevertheless, we still see these circulation spikes, which look good. This indicates that we're seeing a massive amount of unique coins being moved on a daily basis still. This is a good sign too. Like most altcoins, they actually look worse than Cardano because at least Cardano had a nice run to the start of the year. But average returns are down about 4% for any address that's been active over the past 30 days. That's a good sign. You want to see these MVRV ratios in negative range, indicating that buying would be doing so with less risk than usual. So on the short term, you can probably expect a little bit of a bounce, assuming Bitcoin stabilizes here. Long term, though, there's still some risk because if we look at the past year for most altcoins, Cardano no exception, they've been on just massive runs. I mean, XRP 5x or 6x over the past year. Stellar's up there. There's just a lot of huge success stories where we have to be aware that there's still probably some regression to the mean that likely will occur unless Bitcoin just goes on another torrid pace to 150K over the next few months. Then, of course, it'll drag up all the altcoins with it. But assuming we kind of stay flat, which is a very likely scenario over the next few weeks or so, there's some short-term upside, but long-term caution flags. That's what I'm seeing, and I'm only using Cardano as kind of an extreme example because it's had a lot of excitement here in 2025.
Yeah, for sure. That's a great perspective on these coins and what we could potentially anticipate. I'm a holder of both Cardano and XRP, so I'm very interested to see what's going to happen. But it's like you said, Bitcoin is the mover of the market. All coins follow Bitcoin's lead, so hopefully we could see some sort of recovery soon.
Totally. I also wanted to point out the social dominance of different sectors here. This is just a comparison of the top 6 market caps in the layer 1 category, the layer 2 category, and the meme coin category. And as you'd expect, as altcoins have finally calmed down, meme coins are the ones that get way less discussion all of a sudden, way down here. Whereas, Bitcoin and Ethereum and assets like that, Mantle for layer 2s, they're keeping the discussions going pretty well for their respective categories. And on the regular volume side of things, so we really bottomed out in all 4 groups here at the beginning of the year, but now we're starting to see a pickup in layer 1 and layer 2 volume, while people are still a little bit afraid to touch the AI sector here in yellow and meme coin sector here in pink. So I find that interesting. It looks like the crowd is starting to veer toward the relatively safer options for now, because they're seeing that Bitcoin dominance is quite strong at the moment. We've talked about Bitcoin being back at the 94K level, but obviously many altcoins have dropped 20+% in just 2025 so far. So I think that's causing the crowd to go back to Bitcoin and get out of the more speculative assets for fear of losing way more.
And meme coins seem to be the froth. Like once these Bitcoin and these blue chip altcoins, if you want to call them that, the layer 1, layer 2 start to rise and they get some momentum, then all of a sudden the retail crowd comes in, memes, they go crazy. But when you have these pullbacks, the froth, it dissipates, and then there's less talk about these meme coins.
Exactly. Yeah, you can see like the eruption of meme coin volume right after Trump was elected, about a week after, especially when we went on that huge rip up to, we're still looking at Cardano's price, no big deal. Like once Bitcoin got over 80K, people just started saying every meme coin is up for grabs. They're all going crazy right now. We're going to jump in. And that's where you see a lot of greed signals form. So we want to be rooting for stuff like we're seeing now, where the crowd is starting to get a bit safer and their greed is kind of dissolving.
Great insights. ETF inflows. Anything there? I know that I think I saw there was some outflows from BlackRock's ETF. Nothing significant. Obviously they're up. They've been accumulating at a rapid pace. But there was in line with the slowdown in the whale accumulation. There was some outflows for BlackRock recently.
Yeah, I'm pulling up the dashboard here. So this is going to look at the ETF volume for the 7 biggest ETFs, which is what we have data on right now: GBTC, IBIT, FBTC, ARKB, BTCO, BitB, and HODL. Overall, the ETF volume has calmed down. It really peaked the week after Trump was elected, where it was just going nuts. Institutionals were very confident, and they were putting a ton of volume into them. And yes, it was mostly inflow more than outflow. However, we do see, if we look at some of the top ETFs here in terms of their inflow versus outflow,